Welcome to the Crypto Layer HQ. Today I will be going over the general markets and how that may affect Bitcoin. So we've had quite a bit of redness, including in the S&P. We had a big red day, but now it's being bought up and it's turned into a wick. If we look at the Nasdaq, it's green now, but still down. And gold had a quite big red day and silver as well. So if we look at oil, we can see that it's spiking and we are potentially breaking out. If we kind of see that we had this pattern where we would always reject from this trend line, now we've finally broken above, so potentially we will end up going higher. And when oil prices go higher, that puts pressure on inflation. And if inflation starts to go up, it makes it harder for the Fed to cut rates. And if the Fed is unable to cut rates and the markets continue to be weak, then it puts them in an awkward position, since if the markets continue to go down and the Fed is in a position where they aren't able to cut rates, since inflation is continuing to increase, then that could cause the markets to continue and to go lower. And if the markets continue to go lower, that can also put pressure on unemployment. If we look at the unemployment rate right now, it's at 4.3%. And once it starts to go into this more exponential phase, and if inflation is high, then the Fed is basically in a position where they're not able to cut rates despite unemployment going up. And this kind of causes a loop that eventually causes the stock market to crash further and puts us into a recession. Now, of course, it's hard to predict recessions and these things take a long time to play out, but it's something to keep in mind, where Bitcoin did potentially tell us and give us warning signs by having this decline so far. And oftentimes when Bitcoin has drops, it's potentially telling us something, as it could be acting as a leading indicator. So I would keep my eye on oil, and if oil continues to spike and we start to go higher, potentially as high as the 90s or even reaching the 100s, that would put a lot of pressure on inflation, since oil affects the cost of pretty much all goods across the board. And once inflation starts to go up, it makes it very difficult for the Fed to cut. And a lot of people want the Fed to cut, since that makes it easier for risk on assets such as Bitcoin and just stocks and the S&P to continue to go up. But that aside, if we look at Bitcoin right now, it is holding pretty strong, considering that the markets are down and gold and silver are down. Bitcoin is managing to kind of show some relative strength. If we look at Bitcoin versus gold, it's starting to kind of potentially make a base and hold, and even Bitcoin silver potentially made a double bottom and is starting to hold. So there is definitely some relative strength in Bitcoin, and we did identify that March might be a strong month, since if we look at March back in 2022, we did have some strength where we did have about a 25% rally. If we look from the lows right now, we could potentially have if we do have a 25% rally, that would take us to 82K. There is a decent chance that could happen, but I think that will end up being a lower high and will eventually be rejected. And maybe if the stock market continues to show weakness and oil prices continue to climb, then that will continue to put pressure on risk on assets, since the Fed won't be able to cut rates, which could end up resulting in getting our lower low in May in the summer months, and potentially even going lower into Q4 of 2026. So I would be keeping an eye on the S&P and oil, especially since the S&P now has pretty much been going sideways. We can see for quite some time, even since basically almost October 2025, we can see we're essentially at the exact same price we were on October 2025 right now. So it's kind of playing out like a distribution pattern, potentially similar to what we had here, and just many times where even if we look back in 2015, we can see when we had essentially this sort of distribution pattern, we then had increased volatility to the downside. So definitely keep an eye out on the S&P, and more on what oil is doing, since if oil starts to climb, I think that will put some pressure on riskier assets such as crypto and even Bitcoin. That doesn't mean we won't still have strength into March, but I think that will put some pressure later on into the year, including summertime.